Welcome back to Dinar Community Channel. The long-awaited moment that many investors believed would never arrive has finally erupted into reality, and it has struck with a force that few financial analysts or global banks were fully prepared to handle. The Iraqi Dinar revaluation, long dismissed by skeptics as little more than rumor or hopeful speculation, has crystallized into a tangible financial event. What followed was nothing short of historic chaos as IQD holders in cities across the world stormed into banks, demanding exchanges, appointments, and immediate conversions of their currency holdings into newly recognized wealth. The revaluation reality hit hard, overwhelming systems, shaking the floors of financial institutions, and sparking a whirlwind of both opportunity and disarray. For years, the IQD community existed on the edges of the global financial conversation. They were often criticized, mocked, and labeled as dreamers chasing an impossible fantasy. Yet the persistence of this community cannot be overstated. Across forums, YouTube channels, and private groups, they waited, tracked economic developments in Iraq, analyzed statements from politicians, and dissected every whisper of banking reform. When signs of revaluation began to surface, few outside their circles took the warnings seriously. Now, however, the rush into banks and exchange centers has silenced doubters, because the proof is no longer in theory but in the action unfolding across financial markets. The first tremors were felt in Baghdad itself when the Central Bank of Iraq released its updated rate. Within hours, news spread like wildfire across Telegram groups, Twitter threads, and private newsletters. IQD holders in the Middle East rushed to currency dealers, while expats and locals lined up at financial institutions with their stacks of notes. Within a day, similar scenes erupted in Dubai, London, Frankfurt, and New York. For banks unaccustomed to such frenzied demand for currency exchange, the sudden surge resembled a financial storm crashing through their lobbies. Managers scrambled to verify procedures, tellers found themselves facing angry or desperate customers, and security personnel were deployed to maintain order as crowds swelled. What made the situation even more intense was the sheer scale of participation. Estimates suggest that millions of individuals worldwide held IQD, from small investors with a few $100,000 dinar to high-net-worth individuals sitting on billions of notes. The revaluation meant that these paper bills were suddenly transformed into life-changing wealth. People who once doubted whether they would ever see returns were thrust into the complex realities of negotiating appointments, signing non-disclosure agreements, and securing exchange rates that could mean the difference between generational wealth and missed opportunity. Every exchange desk became a battleground where reality met anticipation. Banks were caught in a delicate balancing act. On one hand, they had to follow protocols established in coordination with central banks and international regulators. On the other, they faced mobs of clients demanding answers, demanding their turn, and demanding immediate recognition of their currency. The flood of traffic forced some institutions to impose temporary limits, while others implemented appointment-only systems. In some cities, exchange centers physically ran out of liquidity to cover the first waves of cash-ins, sparking heated confrontations and emotional outbursts from frustrated IQD holders. Videos of these incidents spread quickly online, amplifying the sense of urgency and panic among those still waiting in line. The revaluation event was not just about banking procedures, it reshaped conversations about wealth, fairness, and preparedness. Many IQD holders were jubilant, celebrating the confirmation that their patience and faith had finally been rewarded. Families who had once struggled with debt suddenly found themselves on the cusp of unimaginable opportunity. Retirees who had invested quietly years ago now looked at new retirements filled with possibilities. Yet alongside this joy came deep frustration from those who felt unprepared or blindsided. Some IQD holders admitted they had no plan for what to do after exchange, no trusted advisors, and no financial strategy for protecting their sudden wealth. This lack of preparation created fertile ground for scammers and opportunists, who circulated online promising insider rates or guaranteed appointments, luring desperate holders into traps. Governments also faced a new kind of challenge. In the United States, Treasury officials worked with major banks such as Chase, Wells Fargo, and Citi to stabilize operations and ensure that liquidity was available. In Europe, regulators monitored exchange volumes closely, concerned about potential distortions in foreign exchange markets. Iraq itself became the epicenter of a global financial shift, its currency now standing tall on the world stage after decades of instability. Prime Minister Sadani addressed the nation, framing the revaluation as both a symbol of Iraq's resurgence and a strategic move to stabilize its economy. His speech, broadcast globally, fueled further confidence and sent even more IQD holders rushing into banks. The psychology of the moment was perhaps the most striking element. After years of waiting, the rush was not calm or orderly. It was explosive. Social media was flooded with photos of long lines, stacks of currency notes, and emotional stories of individuals exchanging their dinar for millions in local currency equivalents. Some described tears of relief, others spoke of panic and fear, and still others described heated arguments in lobbies where emotions boiled over. The revaluation reality hit harder than anticipated because it was not just about financial numbers. It was about the emotional release of years of pent-up expectation colliding with the logistics of financial systems not designed to process millions of sudden millionaires. The secondary markets responded immediately. Real estate agencies reported surges of inquiries from newly enriched clients. Luxury car dealerships found themselves inundated with requests for vehicles that would have been out of reach just days earlier. Financial planners, tax advisors, and private wealth managers scrambled to onboard new clients who suddenly needed strategies to protect their wealth from mismanagement, taxes, or impulsive spending. At the same time, governments began quietly drafting new regulations to manage the sudden flow of wealth, concerned about inflationary impacts, capital flight, and money laundering. But beyond the chaos and the celebrations, there is also a sobering undercurrent. Wealth, once created, brings with it responsibility and complexity. Not every IQD holder who storms a bank will leave with their lives transformed for the better. Some will lose their fortunes through poor planning, risky investments, or scams that prey on excitement and inexperience. Others will face challenges in relationships, with sudden wealth creating tensions within families and communities. The revaluation event is not just a story of financial systems but of human behavior under pressure and opportunity. Internationally, analysts are revising their assessments of Iraq's role in the global financial order. The country, once synonymous with instability, is now positioned as a case study in currency reform and national resurgence. The IQD revaluation has demonstrated that global markets can still be shocked by events once thought impossible. It has shown that millions of ordinary individuals can become participants in a massive economic shift, not just governments or hedge funds. And it has revealed that even in the digital age, where wealth is often abstract and stored in numbers on a screen, the sight of people physically storming banks with stacks of notes can still define a historic turning point. In the days ahead, systems will adapt. Banks will refine procedures, governments will enforce clearer rules, and IQD holders will begin to settle into their new financial realities. Some will walk away disappointed by the rate they received or the process they endured. Others will emerge triumphant, their lives forever altered by the stroke of a central bank's decision. Yet for all involved, the events of this week will be remembered as the moment when speculation gave way to reality, when patience became wealth, and when the revaluation hit with a force so great that it shook the foundations of both banking systems and human expectations. The story is still unfolding. As exchange windows remain open and banks continue to process clients, the momentum has not slowed. The storming of banks by IQD holders is not just a metaphor but a living, breathing reality playing out in real time across the globe. It is a reminder that sometimes history is not made in boardrooms or on trading floors but in the crowded lobbies of local branches, where ordinary people, clutching their long-held hopes in the form of printed notes, demand recognition of their faith and their future. And so, as the dust begins to settle, one truth stands unshaken. The Iraqi dinar revaluation has arrived, and it has hit harder than anyone imagined. For better or worse, for chaos or opportunity, the storm has changed everything, and the world will never look at the IQD, or the millions who held it, the same way again. Like and subscribe for more videos.